While everyone is obsessing over Toronto and Vancouver real estate crashes, there's massive wealth building happening right here in Atlantic Canada that 99% of investors are completely missing. This smart money that's already figured this out is quietly making fortunes with great returns that are basically impossible in bigger cities. I'm talking about markets where the 1% rule still works, where you can actually cash flow from day one, and where economic fundamentals are stronger than they've been in decades. If you're tired of building cash flow negative properties and having bidding wars, what I'm about to reveal could completely transform your investment strategy. Hey everyone, welcome back to the channel. If you're new here, my name is Cameron Brio and I'm a realtor in Moncton, New Brunswick. Today, I'm pulling back the curtain on what I believe is one of the biggest real estate opportunities in Canada right now, and most investors are completely overlooking it. If you are looking for more specific real estate investment opportunities in New Brunswick, you can book a call with me using the first link in the description. The first thing driving this opportunity is migration. Most people don't know that this is even happening. In 2023, New Brunswick population jumped almost 3% in a single year, and that's one of the highest growth rates in Canada for a region that historically saw modest growth at best. But it's not just natural population growth. We're seeing record interprovincial migration from people moving from expensive provinces to Atlantic Canada in numbers that we simply haven't seen in decades. Now, at the time of recording this video, some of the immigration programs have stopped, started, paused, might come back. But one of the most popular brought 6,000 new immigrants to Atlantic Canada for guaranteed job offers. And these aren't just temporary workers. These are people that wanted to build lives here with permanent residency. And yes, that faucet seems to be turned off for now, but we did see some major growth. And there's also the remote work revolution. About 40% of Canadian employees were working from home at the pandemic's peak, and a significant chunk of the workforce still remains hybrid. Personally helped families relocate from Ontario to New Brunswick so that they could work here remotely. And these aren't people that were running away from something, they were running towards an opportunity. One client kept his high-paying job in Toronto while buying a $340,000 house in Moncton, and his mortgage payment now is actually less than what he was paying for a one-bedroom in Toronto. There's even climate migration that most people aren't talking about, and really, I didn't even know that this was a thing until recently. Some families are choosing Atlantic Canada for its 4 seasons that are clearly defined, and we have less risk of wildfires. So all of this migration creates one thing, it's housing demand, and demand drives prices. But migration is only part of the story. Atlantic Canada's economy is transforming in ways that most people don't understand. According to the Atlantic Provinces Economic Council, the region currently has $16.5 billion in major projects underway and reporting even more to be put out in 2025. And I've watched the Port of St. John transform firsthand, and it continues to grow with a recent large corporate development stake that's taking place. And with major corporations relocating their operations here, you tend to get their workforce to follow, with companies like Rogers or IBM and Salesforce. As they increase their footprint in Atlantic Canada, so too does their workforce increase. It makes sense. If a big tech company could save 60 to 70% in operating costs by choosing cities like Moncton or Halifax over Toronto, why are these companies coming? Well, they could lower their operating costs by choosing some of the smaller town markets like Moncton or Halifax over Toronto. But let's look at Irving, who's been around for a while. Their shipbuilding naval contract is huge, and it's a massive driver within Nova Scotia. When you have this level of economic investment flowing into a region, real estate tends to follow. Now, let me show you why this creates an investment opportunity, and it might even be once in a lifetime. In Atlantic Canada, it is still possible to achieve the 1% rule where gross monthly rents can equal 1% of the purchase price. And this is almost unheard of in Toronto and Vancouver right now. I recently evaluated a duplex here in Moncton for $300,000. Right now, it's renting for about $2,900 with rent increases coming, but it's not just about cash flow. Property values in Atlantic Canada have been rising significantly over the past 3 years, and many areas have seen double-digit price growth. Since 2019, New Brunswick average price, well, it's gone up 68%. Since 2019, New Brunswick average home price is up about 68%, and that's roughly 14% per year compounded. A colleague of mine who shifted their focus to New Brunswick in 2019 now owns 5 properties in Moncton, and the purchase price ranged from $150,000 to $300,000. And right now, collectively, those properties are generating $9,500 a month in rent, and their total market value has increased by 40% since they started. Compare that to buying one condo in Toronto. Yes, that condo would have appreciated, but it wouldn't have much cash flow, and it could possibly tie up your capital. The rental market fundamentals are incredibly strong. Now, vacancy rates are reported via CMHC data, and they're trending around 2% of the time of recording this video in places like Moncton and Halifax. But we're watching them closely as the rise in CMHC's MLI Select popularity increases, so too will the amount of new construction rental stock. You might be wondering if you've missed the boat since prices have already risen. From where I'm sitting, this is just the beginning of a longer growth trajectory. Atlantic Canada's average home price is still half the national average and a fraction of the big city prices, yet economic prospect suggests continued demand. We're at a moment where some investors are weary due to higher interest rates, meaning if you have the ability to finance now, you might face less competition. But remember, all investing does contain risk, and you should be looking at this over a long-term time horizon. Smart money has started to take notice. Killam REIT, for example, which has about $3.5 billion of assets in their portfolio, is strong in Atlantic Canada, and because they know that these yields are attractive. The secret is out to some, but not to everybody. Atlantic Canada real estate can offer strong cash flow and appreciation, which is a combination that is nearly impossible to find in expensive metros. If you're watching this and you're wondering whether to diversify into Atlantic Canada, the property numbers can speak for themselves. This isn't the speculative pre-construction flipping, it's fundamental, steady real estate investing in an economy and region on the upswing. If you found this eye-opening, please hit that like and subscribe button for more content about real estate in Atlantic Canada. If you are ready to explore a specific opportunity in New Brunswick, you can click the first link down in the description and book a call with me. Thanks for watching, and I'll see you in the next video.